Today is April 16. It is a Sunday, so the market is closed. So we wanted to do a follow-up video on Turtle Beach, HEAR, because we made a video on that on March 23, and I'd like to take a look at it because we also saw unusual options again on these trades. So we are actually going to be closing some of them now because of these unusual options. So we wanted to talk about these two things. To quickly review, back on March 23, which is this date, you'll see that it was trading for about 9.2 when we made that video. We'll put that link if you haven't watched it. Very important to watch that video so you learn how we anticipated this rally, because it was around 9.2 and it closed on Friday all the way up here. It's close to 28%, right? In 23 days from that 9.2 level. When we made that video, it is at 11.8. So in 23 days, 28% rally still. We were able to use those unusual options and predict that this would continue to move up. When on that day, there was quite a lot of resistance pushing it back down, but we were able to call that. And if you look at that video, actually on that day, it was this trade that we were analyzing together. And this was the price that was paid, $12.85, and that was back when it was trading down 9.2, right? And so if we actually take 12.85, $12.85, if we unlock the market to see what it's valued at now, because on that day you could have bought it for $12.85. Now it is worth $23.90. See that? So now if we take $23.90, subtract by what you could have paid for it, $12.85, you would have made a profit of $11.05. So divide that by the $12.85 to see a percent return. That's a 85.9% return. All right. So because the stock had rallied 28% up, with the options, you would have gotten 85.9%. So that's pretty good in those 23 days. So this was a very successful trade. So watch that video to see how we knew those unusual options were right. And now to kind of review these unusual options we saw. So these are some of our position was also here. You see these 8 and 9 calls that we are also in. The ones that we saw on Friday, April 14, they were actually being done at 216. You'll see actually here these very large quantities here. And actually one of them here also same time is 752. So you actually have to add the 752 to this one here because they're at the same 15 call strikes here, same date, October 20. So you have to add 752 to 2084 and then put these trades in and analyze it, because what we found when we analyze this is that there is a new trade expectation coming up, which is actually these three. So these are the three that we believe are was placed. You'll see here the trades here at the 12 put here. We believe they sold it, and then we also believe they sold the 10 calls for the Junes, and then they bought these 15 calls. And so these are the quantities you'll see here in a very different ratio. And you'll see that it's actually it will stay profitable as long as it by expiration, the closest one being May 19, in just about 30 days. If it stays within this range of less than 12.87 and 8.18. So how likely is that? 8.18 is all the way up here. So right here, and 12.8 all the way probably around here. So it looks like there is this belief now that this is actually not going to make much more of a rally anymore, and instead it would most likely drop, but it'll stay within this range. And as long as it stays within this range, these options are going to be profitable. So they don't think it'll drop below that. And keep in mind, earnings is coming up on May 2nd. And so that's one thing to keep in mind. And does that 12.8 on the high end make sense? And it does, because if you zoom out and you look at Turtle Beach, this is actually here at 12.6. This is actually this is a resistance level here, right? So because we're already trading at that resistance level here, which is where we currently are, to make the next resistance level, which is around that 12.6, 12.8, we have another one here. And so that's why we believe that this is a very accurate representation of where the smart money is, where they're selling that, and to take advantage of this very positive theta decay. You'll see here, very nice theta here, that they believe this stock is just going to consolidate here. And after its strong rally, stocks have a time period of consolidation where it trades sideways. And so then they're going to profit from this consolidation now. And so that's what we believe is going to happen based on these unusual options. And so something to take into account if you are interested in this stock. Okay, so yeah, so that's our analysis. If you've learned something, please smash the like button and thumbs up. Helps us continue to make these videos to provide this very deep analysis on stocks. And again, please make sure to watch that video we made back on March 23. Back here before, right around here, we made that video here, and you'll learn a lot about how we predicted this continued rally to take advantage of this stock move. If you had bought stocks, you could have gotten the 28% when it was at $9.2. And so that was quite a good rally. And so now we believe it is coming to an end. And so, yeah. All right. We'll put the link below that video. And so you can watch that. Take care, everybody.